And we certainly do that. Phil Tarrant, co-host of Inside Commercial Property. Scott O'Neill, Director, CEO, Rethink Investing. Scott, how you going, mate?
Very good, mate.
You're looking...
End of the year, only a few weeks left.
Yeah.
Exciting.
You're looking very summery.
Yeah.
Happy. Mate, you haven't seen a winter in about 10 years, have you?
Oh, COVID brought the first winter for a while, but yeah, it was horrible. It's cold.
Horrible,
Remember
cold.
those things.
Yeah, miserable. How you been, mate? Good?
Yeah, good.
Yeah.
Good. No, excited. Everyone's in a good mood this time of year, so but looking forward for a break. I know my team are. It's been a very busy, long year for many professionals coming back into the office and getting into that routine again.
And how's everyone sort of feeling? They got the jibbers about all these sort of rising rates and concerns. Do you think people are starting to slow down their spending? Is it hurting the back pocket yet for most Aussies with mortgages?
Look, you're definitely hearing about it more on an anecdotal point of view, like just talking to staff members and people that are buying their first property. But look, the investors, like our numbers are almost identical every month. Like we're still securing roughly 40 properties per month. The dollar amount is almost identical, around that 50-60 mil a month, and that is not changing because I don't know if you remember, but there's just so much more demand than the supply of commercial. So the supply really affects our numbers more than the demand because the demand's there, and even these interest rate rises. I think all the smart investors are looking beyond just the next 6 months of rates or even 12 months of rates. Like if you can get a deal that's better than it was 12 months ago, then that's the ultimate goal, really. So long-term investors are still active, but I think commercial is also still looking good. It's not a negatively geared product, so it's not as positively geared. No, we discussed that at length last podcast. It's not as good as it was, but it's still a positive situation. So, if you buy with the right fundamentals, it still makes a lot of sense, and that's why the demand's there, I guess.
How far do rates need to go before most commercial properties at purchase are negatively geared?
I had a client do this calculation themselves yesterday, and they just told me it was about 9% in their exact, and that was about a 6.5% yielding type property. Remember, they're putting a little bit of cash into the deal, roughly 30%. So it takes a lot to make that negatively geared. And again, like there's a lot of the properties you buy, they might be 3 months away from a rent increase, or 12 months or 6 months. So there's a rising tide with the rents, which is a good thing. But yeah, the rates have got to go a long way before this starts getting negative. And again, most people are fairly low debt percentage as well. You might start at a 70% debt, but then it becomes quite quickly lower. It
erodes down if you're sort of P&I mortgages and all that sort of stuff. Yeah, and you sort of speak about smart investors, Scott. We have one in the studio today. You can see him on the YouTube, if that's where you're watching, or the TikTok. You're a TikToker, aren't you?
No, definitely not. I haven't got that login sorted.
No, it's good. But welcome, Chris Urry. Chris Urry?
Yeah, that's it. Thank you so much.
Glue it together, mate. So, commercial property investor?
Absolutely.
Yep.
Yes. Enjoy it. Love it. Want to do more.
It's good. And you've been working with these guys for a little while?
Yeah. We probably first met back in around just pre-COVID. When did I say? Yeah, but pre-COVID. And took us probably about... 6-9 months or so to get the first one from that point. And so I've been working with Scott. So just about to wrap up number 3.
Okay, pretty cool. Well, we'll break down the properties that you've acquired. But before we go there, how long have you been at this property game? It's a new thing for you?
No, it's not so much a new thing. The commercial is relatively new. But when it comes to the residential side, I've always been a bit of a passion for property. Started many years ago. Always thinking that the residentials was the way to, secure the future with a good little passive income and a bit of growth and so forth. But whereas I had a little bit of luck with some, but with most of them it was just always negatively geared or neutral. So it was always sort of thought I was doing something wrong. What necessarily wasn't happening right. I had a bit of a experience in one of the commercial properties back in nearly 20 years ago up at the Gold Coast, and at that point though I ended up selling it because I had a bit of an issue with the body corporate and the overall property managers, and it was a bit of an emotional sell. I just had enough of it and just offload it. But at the same time, I didn't take away what I'd learnt from that commercial. It was actually mixed use of commercial and residential, and I didn't actually take away what I'd learned and the positives, and especially the cash flow positive element out of that, and then continue to think about commercial into the future again. I just went straight back into residentials.
Yeah.
And, I had a portfolio probably up to about 10, 11 resis. And from that point, it still wasn't necessarily making me any really money.
Yeah.
So now I'm in the process of offloading those residentials, and I've since now gone into commercial with Scott and the team, and I'm there not looking back.
Not
It's
looking
like,
back.
No,
So how many investment properties do you still hold?
I still hold probably about 6 or 7
Okay.
resis.
And where are they? All over the joint? Or-
Primarily Queensland.
yeah, okay.
And because once again, it's probably one of the biggest issues that you sort of have is like you sort of invest in your own backyard. Wasn't necessarily emotional, but it's the own backyard is all that you know.
Yeah. But to be fair, you probably have pretty reasonable capital growth if you've held them for a little while.
Yeah. I'm not going to say that they didn't go up, but in some of them, like one in particular is a townhouse, so it never ever went up any higher than what the other townhouses were selling for. So, even though you'd think that through this whole COVID time, some of the places in Brisbane would have went up like, 20, 30% or whatever in the value, but no, the townhouse, for example, did not.
Yeah.
So, and then once you take into account your body corporates constantly going up and your water and your rates and so forth, I was probably making about $100 a week out of it.
Yeah.
In some cases, only probably a couple $100 a month.
And you still had to deal with having to fix things, and there was always perpetual problems. Yeah.
Yeah.
You get a lot of resi property investors, they get to that point where they just go, yeah, I've had enough of it. But you've got to start somewhere, right?
Yeah, absolutely. You've got to start.
It's a really good way to get going. So you're selling down. Do you have any debt on your residential properties?
Yeah, I do have some of the debt on those resis. In just going through the whole process now of sort of selling off the weakest links. And ironically enough, it was only a couple of days ago that one particular townhouse just put a contract on it literally on Saturday just to sell it all off, and from there that'll just free up cash now to move into the next commercial.
Yeah.
But so I'm slowly just getting rid of all the residentials.
And so you're selling down the resi stuff. If there's debt on it, you're paying it back. Then it leaves you with the deposit for the next commercial purchase. So and sort of, is this just a realisation for you over time that resi property wasn't going to get you where you wanted to go?
Yeah, absolutely. Once starting to see that I just wasn't making the money and getting the capital returns out of the residential, I just knew something was going wrong. And once we started to look into the Rethink Investing and what they're doing in the commercial, and looking at the numbers, because just sort of look at the website and what everybody else is sort of saying, and from that point, it's like, this looks good.
So you're about to close out the third commercial deal now. What's the game plan? I could probably guess your age, and you've got a bit of time left around still. So what's the game plan? Are you going to just load up on commercial, or you've got a number of commercial properties, or the size of the asset base you need and the revenue it's going to create for you?
Yeah, like the intent was to probably cap myself out about 4/5 commercials. The intent all along was also to replace income, and it's good, nice, clean, passive income. The last 20 odd years of, I've been successful in my own company, which is great, and I was also fortunate enough to be working very closely with my brother as well through that whole time in the companies.
You still mates?
Yeah, we're still mates. And and I talked to him a lot about the commercial stuff as well. Maybe one day I'll flip him into getting one. But so I've been fortunate enough to have the company, but just sort of burnt myself out now over the last 20 odd years. I just want to be able to replace that income and just be able to not much do nothing. I'm too hyperactive to do nothing, but just have that passive income, then have the choice. And that's what the commercial property investing has allowed me to do, is to have actually choice and control now over what's actually happening in my life. Whereas before, you were sort of bound to the 9 to 5 and the board or whatever else was driving you and controlling you. No, this is now put control back into my own hands, and I can make the choices of what I want to do.
So you're pretty active then on the commercial stuff, or you're just taking a relaxed approach at all?
At the moment, I'm just taking that relaxed approach, leaving the property managers run it. However, I sort of given myself a bit of a plan into next year. The first 6 months is just to do a bit of another look at everything that's actually happening and in my properties, and actually look at, okay, what can I do to improve these properties? And I'll take a little bit more of an active role next year. However, I'm not going to still do the property management. That's just too hard
Yeah,
basket for me right now. But I will be a lot more active as like, okay, well, what, look at taking what I actually learned from the books. I've read the book a couple of times now, and start to look at, okay, how my property's performing based off, other properties in the area. What other capital improvements can be done? When's the lease is going to be up for renewal? What can I start to do to get more equity and more money out of those commercial properties, and then move from number 3 into number 4 and number 5. So I want to leverage the 3 to buy number 4 and number 5. So I don't want to necessarily keep on dipping into cash, because my other cash is just rolled into residentials, where I live and so forth. But I want to be able to leverage what I've got now in the commercial to buy number 4 and number 5.
So this idea of replacing your income, replacing your salary through passive cash flow coming out of, or positive cash flow coming out of commercial assets, have you chosen your number and said this is what I'll earn a year, or is it's already sort of starting to go up a little bit?
You always have a bit of a North Star when it comes to what you want to achieve, and it's always a bit of a stretch. You always have that stretch target. I've always had that stretch, but it'd be great. I always want to aim around to hit the $50,000-$60,000 a month mark. On when it comes to passive. And do I need that? No, I don't. But once again, it's a stretch.
It's good money.
Yeah. I'm not sitting here saying that I can't survive on that or anything like that by any extent. But that's what I wanted to achieve. Yeah. And because if you sort of know my background, it's always goal orientated. So it's like, that's the stretch. Okay, that's where I want to be. And then once I get to that point, then I go, okay, I'll flip all that. That money will then move back into other investments, which is continue to grow. But I just always sort of pushing myself to that stretch. So that's what I want.
Yeah. So if you're looking at $600,000 a year in income, post everything connected with commercial ownership, how big a portfolio do you need for that, Scott? That's moving.
Well, it's a moving target now with the interest rates.
Yeah.
You could do it with a lot less property 12 months ago.
You could.
But yeah, look, if you're working off, I'm just really rough numbers. You buy $1 million of property, your interest rates, call it 5%. There's 70% debt there. So what's that? $35,000 of interest, and you're getting a 7% return. So you minus that. So you're making about $35,000 every $1 million you spend. So $10 million property, $350 clear. So, you're probably looking 15, 16 mil of property with debt.
Yeah.
Off the top of my head. That's sort of what I'd be looking at, and obviously that will squeeze. Like the average interest rate we're seeing with clients is still around that kind of low 5s at the moment. Depending on which bank you talk to, there's one increase coming or two or none, depending on they've got a bit of a spread at the moment. So look, the numbers are going to probably stay roughly where they are over the next 12 months. So it's quite achievable, but you need sizable deposits to get. It's a very large passive income, but it's a good one. Like, I think goals are super important with commercial, because you need to have that number, and it gives you a reason why you're investing, not just like how many properties I've got to buy. That's the common one in residential. Like, I want 10 properties before I'm X amount of years ahead, and that's kind of irrelevant, really.
Yeah.
It's all about the income. I know my initial goal was to replace my wife's income when I was working, and then it moved to my income, and then it went beyond that, and it's sort of just each year you've got to have a new goal. So Christmas is a great time or that early January quiet period, just sit down and go, what are my goals? What can I push for this year professionally, health-wise, social, like whatever it is, just write them all down, and it's
use
so
the
important.
time. Yeah, it's good. It's and look, the numbers start getting big when you look at generating that as an income passive cash flow. But it's all achievable. I guess the biggest sort of handbrake to investing in commercial property is really getting a chunk to finance the deposit, right? For every $1 million in commercial property, well, you need $300,000 as a deposit, then plus all the stuff connected in with it. So, what would be a really easy sort of metric for people to work on? For every $1 million, you need how much cash to get in?
$350.
$350.
Yep.
So just another 50 on top of 300.
Yeah, about 5% buying costs.
Yeah. Stamp duty.
Yep.
All that sort of stuff.
Yeah, so it's very capital intensive, and that's forever what the barrier is for most people. So, and this is why you start in residential, because you don't go into this with 50 grand deposits, but
Yeah.
you can do that with resi. And, the idea is you might buy a few residential properties. This is for people just starting out. Do what Chris did. You buy a handful of those maybe, and then let a number of years pass by, and all of a sudden you've got equity, which you can refinance out, or do what Chris and I have both been doing, selling off, because they don't solve a problem at some point. Like, you can hold resi and just play the long-term game, but like once you're at this stage, they don't do anything for you. It's an admin, and then maybe you sell, but yeah, you're selling your profits off, pay your tax on it, transition it into a higher cash flow product, because you're going to get as much growth in this as well, and especially if you start looking at value add strategies as well, I think you can make it more equity plus more cash flow. It's kind of the best of both worlds. But like we said in that last podcast, there are greater risks, and you got to know what you're doing in this space too, and that's the other barrier to entry.
Yeah. So you're happy commercial investing then, Chris?
Absolutely.
Yeah.
Very happy.
What aren't you happy about?
I'm not happy about in the commercial side.
Yeah, just in commercial investing.
Oh, gee.
This is not a podcast about life. It's a podcast about commercial property.
Listen, it's difficult for me to say what I don't like about it, because I'm still on such a big learning journey.
Yeah.
So I haven't really probably unwrapped and discovered a lot of the things I don't necessarily like yet. Like, I haven't gone through the issues of vacancies and and all that sort of stuff yet, or the big capital expenditures. I just haven't gone through that particular part yet. But at the same time, I'm preparing for it. Like, once again, taking the lessons learnt from what Scott and Amina put in the book. Making sure that there's budgeting and you're saving for those times. So I'm just spending that time at the moment to plan for the future, but I haven't really gone through a lot of negatives yet. It's been a very interesting journey. It's been good.
Well, it's best to work on your education when times are good, right? Rather than trying to learn when things are bad. And So how proactive are you in that sort of education? Is it just through osmosis? You pick up stuff, or you're more structured in your learning?
I'm more structured.
Yeah. Okay.
So I was spending the next few months now looking, taking from the pointers in the books and obviously the discussions I have with Scott, and actually planning for the future. And I'll be very structured. I'm probably a bit of a detailed sort of type of guy, and driven towards a certain outcome. So I'll just sit there and I'll just work my spreadsheets and I'll work my methods and so forth, and to a point that I'm happy with. And then from that, I'll then apply it, and reevaluate everything that I've got, and remove the weakest link, so to speak, out of the properties. Even though those properties could be making some money, I'll just remove the weakest link, because I know then that I can turn that cash from that weakest one into something which is a lot more, making me more money.
Yeah.
And I'm not going to turn around and say that you never sell any of the commercials either. If one of the commercials is one of the weakest link, if I can take that money out of that commercial and move it into a more higher yielding sort of investment, then I will. You're always reviewing the weakest ones you got. Not to say that they're weak or they're not making you money, but it's just reviewing and being aware of what you've got. Awareness is actually one of the biggest.
Awareness is key. Situational awareness, right? Knowing what's going on. It's an aviation term, but it really explains well, knowing what's going around you, 360 degrees, up, down, left, right, and trying to sort of plan for the future, right?
Absolutely.
Pulling all the different things like the weather, the economy. Are you worried about the economy? Are you worried about sort of negative sentiment for business growth? They're predicting growth in the economy, but they reckon it's going to be a bit sort of lackluster compared to years prior. The government, all this sort of stuff, no worries?
There's always some aspects of the government that you do get a bit worried about, what's going to be in store for the future. But when it comes to these sort of my investment strategy at the moment, I'm not really too concerned about it. I'm just focused on achieving certain goals and outcomes, what I want out of my commercial properties and properties as a whole. And that's where I focus on to keep my attention, because that's in my control.
Yeah.
A lot of the other things are outside of my control. I've just got to live with it and go with the flow.
And that's it, right? You can't fight those things because you're never in battle.
Yeah, that's it. You got to take what you've got and best prepare for the future.
Yeah.
And that's exactly what I'm doing, and that's where the commercial stuff has really played a long way.
So Chris keeps mentioning your book. I can't remember the name of it. Scott, what is it?
Rethink Property Investing. I nearly forgot.
Can you still get it? Is it still available?
Yeah, look, we're doing an update on it because it was written pre-COVID. So I'm just going to try and make it a bit more evergreen, just because a lot's changed since then.
Yeah.
Like it's a different world, and and the book it's sold a lot and it's influenced a lot of people into this space. So we want to make it kind of up to date. So yeah, there's a little bit of stuff. But if anyone had feedback on it, like what extra chapters or whatever, shoot it through, because that's something I'll be looking in the new year to do.
What's the best way to contact you guys again?
info@rethinkinvesting.com.
Okay.
So thousands of people have read the book. So yeah, any feedback, good or bad, would love it.
Well, mate, I was gonna actually ask you what, because he's an engineer by trade, which makes him a bit strange when it comes to numbers and stuff. What's your trade?
Well, I am an accountant, actually.
Okay, there you go.
But I've never practiced it.
Never practiced it. Yeah. Okay.
But I've always had the passion in financial technology.
Okay.
So back-end payment processing systems and banking systems and so forth. That's where the passion has always been.
So you're comfortable around spreadsheets?
I'm very comfortable around it. You know, so yeah, it's always a big numbers game in that industry.
Yeah.
But once again, it doesn't mean to say that I'm an expert in what we're doing here in the commercial side either. There's a lot to learn. But that's my background, is in financial technology. So I'm fortunate enough in that regard to have that.
That's cool. Well, I was going to say, your book, mate, I can send it back to you with some red pen all over all the typos and grammatical errors. And
Bring it on.
Bring it on.
Yeah,
I'm sure I could find something in there.
I hope so.
Dust it off. But, I'm just trying to think what more I would add to your book. I think you'd have to update it now. The numbers have changed, around. And this, and we sort of broke this down last time we got together on this podcast, was like, we took a contrarian view to commercial property investment, which is a really good way to sort of stress test it, red teaming, if you want to call it, going, okay, where's all the problems with it? And you're not making as much money at the moment. But this is a moment in time. Yeah,
so just explaining a bit more of that, like, it's really about how much you're going to make over a 10-year period once you all add it up. Like a year one equation's quite irrelevant. It's about the year 2 plus year 3 plus year 3. That's what you want to look at. Average all that out. And it's very hard for many people I've witnessed to see a 10-year picture, because it's a cash flow that kind of builds on itself, and you kind of got to look at an average interest rate, what you think it's going to be over an average length of time, and not get so fixated on today's. Because if you look at the interest rate right now, it's going to make a different decision than you did 6 months ago. Like 6 months ago, I was still looking at 5-6% rates when any decision I'd ever make, because 2% was a fairy tale. That wasn't going to last forever. And if it did, I think there'd be bigger problems, because asset values were going through the roof quicker than we could keep up. So we're now seeing yields, they're basically stabilised in most strong markets, and that's kind of, as a buyer's agent, that's the best thing, because now I see really good value again, because it was getting stupid before. And so just sort of explaining how money over time works and what that looks like for future capital growth. And the book, we wrote it fairly quickly in a COVID kind of environment. So I felt there's more detail we can include. Like we've been talking for 2 years on this topic, and we're going to go for a lot longer, because it's endless. The amount.
You could probably just transcribe these things and put it in the book, and it's all there. It's probably a bit easier for you. But I look forward to that coming out, and it gives you something to do over the Chrissy break at least. Start thinking about that and doing it. Do things stop over Christmas for commercial property? Is it a good time to buy property?
Pre-Christmas, It's quiet. January is the quietest month of the year, no doubt. Like stock is brutally low. Fresh stuff doesn't really come out probably end of January. So, the industry does go to sleep a bit. Lawyers are away. Property managers are on their big break. You've got the sales agents that are on beaches somewhere. So, deals are still done, but it's low volume. So December, it's quite action-packed until the 23rd of December every year. And then it doesn't really start getting going until Feb. Okay. That's sort of my experience. And then there's a lot of listings in February, so that's a good month to be active, because you get that kind of blast that people are delaying listing from this year to next year. And then it kind of, the next quiet period is probably around that Easter period. So that late summer is very busy. There's no winter selling season in commercial. It kind of just goes through. That's one big difference from resi to commercial. Spring is winter. It doesn't matter. It's all the same. Because it's businesses, commercial investors, funds selling. So they're very busy actually at the end of the financial year, selling and doing stuff. and
People
transacting.
offloading stuff and getting recalibrating for the next financial year.
Yep.
Yeah. No, it's good, Scott, to actually have someone come and have a bit of a yarn with us who is comfortable around commercial property, and obviously Chris is sort of the journey that a lot of people have gone through or going through. This is sort of beefing up a resi portfolio and then working out it's just too much sweat equity for not enough yield, and shifting in the commercial. We'll have a chat about some of the properties that you've secured, Chris. So you guys started speaking sort of just before COVID hit. I don't know if that slowed down everything for you. You were still working your business then?
Yeah,
or was
absolutely.
it,
Still work. Yeah, it was towards the end of it, but so that's when I started to really think about what's going to be my investment strategies moving forward, because I was sort of coming to the end before selling out the business and so forth. So I wanted to work out what's going to happen.
Work it out.
And obviously spoke pre-COVID. One of the first one that got into is actually up in Townsville.
Okay.
Industrial site up in Townsville.
Yep. Townsville.
Yes.
How did you? Okay. What did you buy?
It's actually in the industrial sites up there, and I can't even actually recall all the information about it now. But I think I ended up paying about $2 million for it, and it's a scaffolding company actually up in Townsville. So it was a hard floor stand up there. It's about 5,000 odd square meters, I think it was up there, if I remember correctly. It's got a warehouse and so forth on it. Great return, and that was sort of my first step into commercial. It's also got a billboard on it, which is a separate.
Okay. You own a billboard?
No. It was it's an advertising billboard on the side. Yeah. So it's sort of two.
Oh, they rent the space off you.
Two different rents coming through on the one spot with a billboard on it.
So you need 600K. So you about 700K you needed to get going with that.
Into it, with a little bit of other things, yeah.
And did you raise that deposit through selling off a resi thing, or was it just sort of the mash tray money you had lying around?
No, it was through. At that point, it was selling off some resis.
Okay.
Yeah.
And what sort of yield are you getting on that place?
If I remember correctly, it was around the 7% return yield. Yep, at that point.
All right, nice. So positive cash flow. So what's that sort of providing now annually into the slush fund for replacing your income?
Yeah, it's probably returning after all net costs at the moment around the $70,000 to $80,000 a year.
Okay, 70-80K.
Yeah.
Okay, it's a nice start. So
yeah, so
just
to give
need
you
about 7 more of them, 8 more of them.
I think at the time when you bought it, Chris, so 70% mortgage at 3%, that was $100,000 clear, and now at 5%, $74,000.
74K.
Yeah. So I keep an eye on my numbers, and that rings true actually from where I'm at the moment, about $70,000 a year out of that one. Which is great.
Yeah.
For sitting back and not doing much.
So that's one commercial asset pretty much generating the average Australian income.
Yeah.
Yeah. But you need 700K to get going.
Yeah, absolutely.
Yeah.
Well,
so essentially you've got to put 10 years worth of capital into it to pull back, 70K a year out of it.
It's always the long plan, and when it comes to investing in resis first, building up some of that equity, removing the those resis and pushing the equity into the commercial side, or leveraging even the place your own principal place of residence, for example, like that. If you've got equity in that, then you're able to borrow a bit more to get into commercial. Because at the end of the day, the numbers stack up. Plain and simple.
Yeah. And long-term tenant, probably not going anywhere. Scaffolding. There's a lot of stuff happening inside.
There's a lot of stuff happening. The people we bought it from were actually the tenants, so they own the property.
You get that a lot, don't you? Lease back.
Yeah, leasebacks. I'd say 1 out of 4.
Yeah,
very common. So 25% of the time we're doing a lease back, and it's just businesses don't want to have $2 million stuck in a property, and they might go buy more scaffolding, because they know there's a boom coming up, which there's a building boom up in Townsville going on. So you can't get builders out there because they're just so flat out. It's a really good market for industrial up there, and we're seeing rents grow quick. So the market is going in the right direction up there, and that's going to be a long-term benefit. But $2 million in a property or $2 million into business, staff, or stock. It's that's the reason these guys sell a lot of the time. The key is to check it's done at the right rate. So I remember we were looking at this. It was 116 a square meter. There were comparable rentals, all in that kind of low hundreds to mid hundreds. So it stacked up. It was a fair rent, and if the leaseback is done at the fair rental rate, then the risk is quite low, because if that tenant bails on you, you're going to get the same rent, if not more, with the next tenant. So
yeah,
that's the key.
Have you spent much time in Townsville, Scott?
Oh, not a great deal, but
Yeah.
I nearly bought a pub up there, which I pulled the pin on last minute. It was sort of about a year and a half ago, so I put a lot of time personally in there, but we've helped a couple of hundred clients purchase in Townsville. So it's a market we deal, about 90% off market up there. We know all the agents, we know the good parts of the market, and it's just a good workers' town. Like, it's not a tourist dependent area. It's got plenty of industries just powering it, and the key is it's coming off a low base. Like, you're buying below replacement cost still, for these warehouses. So that's a good fundamental always.
Yeah, I'm thinking about doing a trip up to Townsville in the new year. I've never been up there, and I'd like to sort of check it out to get a feel for it.
Stop
Right?
at the Wed Sundays on the way up there.
Have you been on the Townsville and?
I've sort of I haven't been there for many years. Like, it should be noted that even got these commercial properties, I actually haven't seen them yet. So you don't necessarily need to once you've got the good managers and everything in place. But up through that area, it's beautiful up there with the Whit Sundays, nice, relaxing. So
Yeah.
I recommend that.
Yeah, well, we should go up there. I know the federal member up there pretty well, Philip Thompson. I've been sort of telling him that we're going to do a trip up to Townsville, have a look at defence stuff, but also the property market. So maybe we can do a.
Well, that's the other thing, the big defence force, and that's they've really increased the budgets up there. So a lot more personnel up there, and that's a lot of defence housing, and we buy industrial properties kind of right near the airport there as well. So it's just a good priced asset. And I remember there was a lot, like, we got in there like early as well, when people were saying, oh, it's not the right time to invest. But I was just looking at the yields were great, vacancies were low, the rents were just so cheap. Like, you go to neighbouring towns like some of the other major regional centres, and the rents are about 50% higher per square metre. So it doesn't, like, there's just value for a tenant there, and all these things kind of add up to upside. Yeah,
well, let's. I'm sure. Philip Thompson MP be happy that we're singing the praise about Townsville. He tells me it's a pretty good place. So anyway, so what was the next purchase, Chris?
It was actually south of Perth.
Okay.
A little beach area called Quanana.
Quanana
Beach.
I've never ever heard of that.
Yeah, it's about 30 minutes or so, I think it is, south of Perth.
Okay.
That was the next one. That one was a big place. Big. I'm not going to say it's not a Bunnings, but it's a big warehouse sort of type Bunnings sort of type scenario. Great tenant in place, and great returns as well. Like, it's a 6,000 square metre site.
Okay.
All industrial again.
Just under one roof, like, so there's just one tenant.
Yeah, just
one tenant. Yeah. So warehousing again, is it?
Yes.
Yeah.
So good annual increases across the rents.
Yeah.
Great returns. Once again, we're looking at if I remember correctly, the yield itself was closer, 5.6 up, around 5.6, 5.7%.
Yeah, cool. And how much you pay for it?
That one was just around $6 million.
Okay.
Yeah.
All right, that's a reasonable in. So you've had to stump up a few shekels there.
Yeah, absolutely.
Yeah, that was a big check to write.
It was.
Yeah.
Sort of, definitely hurt the hip pocket.
Yeah. So what's that providing now as income to you annually, sort of based on sort of current interest rates thereabouts?
At the moment, it's probably bringing it around 230 to 240 grand a year.
Yeah, 240K per annum.
Yeah, after everything. Yeah.
It's good, stable tenant, no issues, no worries.
It's one of the top businesses, public listed companies in Australia.
Yeah.
Sitting down there. Yeah. So they're not going anywhere.
And it's a big site, like, I bet they look after everything, right? There's a beauty of commercial property.
Yeah, and that was also one of the things that I really discovered when it comes to going down the journey of commercials. Like, I don't have to do anything. The tenant pays all outgoings.
Yeah.
Land taxes, rates, water, maintenance, upkeep, everything. And if they leave, It's all
That's
about
it.
making good. So it
Yeah.
was, whereas, on the resi side, it's completely the opposite. So, but these guys take care of everything. Work with the property manager over there. We've got our budgets in place when it comes to the outgoings. Every single month, the tenant just pays a certain amount of money towards the outgoings, and then we just do a shore up at the end of the financial year. It's nice.
Tick it off. And how'd you go about finding this place, Scott? Was it sort of...
Off-market deal.
Yeah.
Just one of the it was like a smaller agent that doesn't deal with this, and because it was an ASX listed tenant, I remember I just did one of those kind of posts on Facebook, showing the numbers, no address and all that. But I had all the auction houses reach out, going, "Oh, let me know if your client wants to sell," because this is like the type of property they love auctioning, because it's ASX tenant, long lease. It just looks, it's like one of those trophy looking type properties, like big brands all over it, all that kind of stuff. So that's why the yield was sharper. Sub 6% is what we'd class as a sharper yield, but you're getting it back in kind of like the endless security of a tenant that just will not move.
Yeah.
Like, because they're protecting market share against some of the other big boy competitors have got. So yeah, you can kind of just close your eyes with this and fast forward 20 years and they're probably still going to be there, and rent's going to be higher, and and the banks love this type of stuff too. So yeah, off-market deal, and yeah, if you wanted to flip it, Chris would make a profit, because this would be one of those ones that sell it probably closer to as like a sub 5% net yield. Because that's what they do at auctions these days. So,
Okay.
but that'll fluctuate over time as interest rates go up and down too.
Yeah, and so property 3, which you're working on right now, are you?
Yeah, it's all unconditional, and it settles next month actually.
Okay. Where? What is it?
That one's down in Tarrant.
In Tarrant?
Yeah. Or
Wow.
up in Tarrant.
Tarrant. It says about 3 hours. It's only about 3 hours from Sydney now, Tarrant.
Yeah,
okay. The road's a lot better.
Yeah, so this next one here is I've stepped up a bit more. So it's the 9 million.
Okay.
And it's got it's basically one of the supermarkets in it. One of the
Okay.
Yeah.
It's like a shopping centre.
No, it's not as much a shopping centre.
Yeah,
it's
like
just got a good. It's got an IGA in there actually.
Okay.
Which is it's a great one to get to sort of finish out the year with.
Okay. So it's just got one location, one tenant, $9 million.
Yeah.
It's on the high street. Must be sort of pretty well
right
located.
right in the centre of town.
Okay. Wow. That's
And it's it's got backed rent there as well. And this, the good one about this one is that it's got a 10 plus 10 year options on the lease as well. So it's got a lease now up until 2027, if I remember correctly. And 2027, 15-year lease up to 2027, and then 2 by 10-year options on top of that.
Okay.
And once again, it's a case of built-in CPI increases and
Just set and forget, really.
Set and forget.
Yeah.
Especially when it comes to sort of these recession-proof type bubusinesses. Well, with the supermarket, someone's got to eat, right?
Yeah. And what's it providing to you in positive sort of cash flow now?
If I remember correctly, I'm just trying to remember actually.
Yeah.
All the figures. About the 380,000.
Okay. So you're pretty much 380 plus 240 plus 70, right?
Yeah.
You're well on your way, right?
Absolutely.
That's yeah, you're on your way.
Well and truly on the way. And the beauty about it too is I do have some high performing resis as well. I'm not going to say I don't have any of the high performing resis. I do.
Yeah.
I'll be happy with, like I said, number 4, number 5 on the commercial side, and I'm sort of happy to.
So what's next? So you're gone from $2 million to $6 million to $9 million. Are you going north, or are you going to stay around that?
I'm not quite sure yet. I'll have those discussions with Scott and with regards to what the next strategy is. But like I said, it's a case of I'd have no problems in removing the weakest ones out of it to continue to grow further. I'll always be looking at nice stable tenants. I've always had a bit of an idea about getting one of the properties which has got medical in it or something like that. Once again, it's recession-proof sort of type businesses. I'm not really interested in the supermarket type of. When I say supermarket, not with the Tarrant one, but cafes and sort of
like smaller little stuff.
Yeah, it's sort of too hard basket. I just don't have a passion for those ones. I want to be able to have those recession-proof type businesses in there.
And you've never been to any of these properties?
Never.
No. Wow. You have to pop up as a mystery shopper, have a little nose around and kick the tyres, you know.
Jump in the car, go for a drive.
Yeah.
No.
But it goes to, you know, they're not emotional investments.
They're not, no.
It is you're buying capital growth and you're buying income.
Absolutely, and that's one of the key takeouts as well, is that the times that I've sort of lost money when it comes to property is when you've had the emotional element into it. Is you're investing into, regardless whether it's residential, commercial, it's a business. You want there to make the money, so you take the emotions out of it. As soon as you bring emotions into a business deal, you're going to lose money out of it.
Yeah. So how are you holding these properties? What sort of structure? Inside of trusts?
Yes,
Okay.
Trusts, multiple companies. Yeah.
So every property has its own.
It has its own
trust.
entity. Yeah.
And the purpose of that is risk management,
Yeah.
continuity, succession, all
Land
that sort of
tax
stuff.
too.
Land tax. Yeah.
There's a whole variety of different things.
So you got someone smart advising you on this stuff from a taxation point of view.
From it, I've got a great accountant in place, and also some other advisors as well that help me out with what I'm doing, just to make sure everything's structured correctly. Because the long term play here is not just sort of for myself, but I'm doing this for my kids.
Yeah, it's
simple.
Aren't they great generational assets, right? Like you know, you give them a free pass to your kids. You know,
the,
in some way.
Yeah, the good thing about it too is that I've passed this book on to my daughter as well. You know, because in everything that I'm doing, it's not as if I'm not educating them. I'm saying, hey, this is what I'm doing, and this is how I'm going about it, and what it ultimately means. They're not getting a free ride by any extent. You know, but they are being educated along the way. Because if I'm going to learn something, I'd rather pass it down. So, and everything that I'm buying here at the moment,
are they interested in it? Do they care?
My daughter is.
Yeah.
Like, she's 16 now, so she's got a bit of a passion. My son, he's a little bit younger.
Yeah, he's just like, okay,
he's a boy. Let's ride a bike and off we go. But he'll definitely start to. As they get a bit older, they'll take a bit more of an interest. So he's not so much into it at the moment, but my daughter's going, what's this about? And so I will actually explain things through to her. She may not necessarily always get it, but I will try to explain and educate as I go along. Yeah,
you're better off that education process to be long term, right? You don't want to cram on this stuff, just through osmosis, learning on the way. It's,
really we've made mistakes along the way. So if we can say why we went about doing things or why I did things this way, made the mistake, and this is what I learned, keep this in mind for the future, then that's a great step up. It's something that you won't learn at school. So, but everything I'm doing at the moment is just purely all for them, and obviously for myself, from a lifestyle perspective, and to get myself through. But everything will all just flow down through to the kids.
Cool. And how are the lenders at the moment with, you've got sort of all this positive cash flow, which shows serviceability. I don't know if you're generating an income elsewhere, but are they happy to lend you money? The moment, the banks?
They are happy to, but there are a few changing goalposts happening, plain and simple. They are looking at, the locations for sure. They want to know where they're at and how much money they are making, but they still do look at some of your personal income to it as well. And that's one of the things that's on my list for next year as well, looking at my structure again, making sure that I'm generating income in the right ways.
Yeah.
Especially back to myself personally, to ensure that the banks are happy as well. So there is a little bit of work there to be done. Like, I am doing consulting work as well. I don't necessarily work full time anymore, and I don't want to go back to that part. But I am still generating income through through on the side through my consulting, which is all great. But when it comes to the banks and the lending, they are. The more and more you get. They are starting to look at, okay, what's the exposure? What other income are you generating? But the best thing just to go down is the lease stock loans as well, because then it's the loan based wholly and solely straight off the income generating out of that particular product. But still, once again, they still come back and look at, well, what else do you have?
Yeah, and the plan with these properties is just so you're still acquiring property, so you're not looking to pay down, the debts on these current assets, other than just your sort of principal payments into it. At a point in time, do you think you'll stop and then just start trying to pump all this money down into debt paying, so it's completely unencumbered at a point in time?
That would be the plan. It's not part of my current strategy. My current strategy is purely debt, interest only, making sure that obviously the yield and the return is there to pay off the interest only component, because it's an investment. I'm quite happy to pay that. It's using that money over there to get generated income over here, and then from there I'll just continue to grow and grow and grow. But it will get to a certain point where you cap out, and then I'll probably start to consider, okay, where am I at with my residentials, security across residentials versus my commercials. I'll then start to pay down all my residentials, any security elements on there, and before I start to flip it back to the commercial side. But when it comes to paying down the principal element of my commercial, that's right here, right now. It's not a high priority for me at all. It's purely growth.
Yeah, and have a good tax accountant to sort out the backside of it all.
Oh yeah,
it's good.
I run everything all through Xero myself personally.
Yeah, okay.
Everything is just
there.
It's all
So
there.
you could run as a business.
Yes,
that's cool. Well, let us next time you buy something, come and update us. That'd be really good. Whenever that happens, and
I'm sure it'll be next year for sure.
It'll be next year at some point.
Definitely. I've already told Scott to look for number 4. I haven't even finished on number 3.
So you're in Queensland, Western Australia, New South Wales, so you get a good spread there.
Well, might be time just to do that road trip all around Australia and
you should
and see the property.
You can do the lap, right? hitch up a gold-plated caravan to the back of your car.
Oh, no, I'll be fine with that.
That's good, mate. Yeah, thanks for coming in, Chris. I really enjoyed.
No, it's been great to have a chat and just talk about things, and it's been awesome.
It gives us a different lens of you, sort of property investors. They come in all sort of shapes and sizes. A lot of people sort of get fixated at these $2-3 million properties, but there is a completely other world, isn't it?
Yeah, and I thought it'd be good to bring Chris in because he's buying the trophy assets, like the ones we all want to strive for. And I guess the main message is it takes time, and you can build yourself up to this. You don't have to just have a very successful business. Like we're dealing with, still most of our sales are sort of under 1.5 mil. But this is what you work up to, because once you buy them, it is going to be something that you pass on to the next generation, and what a great asset to have for that next generation, because they're big established businesses that have done stood the test of time, and but it requires a lot of capital. So it's you've got to take baby steps to get into this stuff. But if you're lucky enough to have like a good business and experience like Chris, you literally can get these types of results that I don't think people think are possible. Building that amount of passive income, you don't really hear about it.
No.
Ever. And it's very possible. And Chris,
well, it truly is passive, right? Like you've got to manage your properties and stuff, but you can head off for 6 months, right? Don't worry too much.
Absolutely.
That's the goal. It's good. Thanks, guys. Scott, thanks for 2022. We'll be back again in 2023 for season whatever it is of Inside Commercial
Season
Properties.
3 now.
Season 3.
Snuck
Jesus
up.
Christ. And we've still got plenty of stuff to talk about.
Yeah, I thought we'd be running out after about 10 episodes, but the market just keeps giving us little curveballs.
Gift that keeps giving, and that'll be something we can continue to discuss over 2023. I reckon there's still another couple of 25 basis points rises, February and March, potentially is what my read of the market is. So but then I think we'll probably stop.
So what did I think Westpac said 2 more rises, CommBank said 1, Macquarie said none. So let's see who's right.
But we're sort of getting towards the top, right? We're pretty close to the top. We've got 2 months now, sort of up until the start of February when the RBA meets again. So it'll be interesting to see how the data around spending sort of flows through and see how much Aussies are hurting. But, we'll give it some, with a view of commercial property, and that'll be 2023. Info at rethinkinvesting.com.au is where you need to go for more info. You guys are busy until Chrissy and then probably slowing down a bit. So if you want to get going, when's the best time to touch base with you guys? Sort of late Jan?
Yeah, look, just reach out any time in January, and we'll obviously have a chat. We're back on deck on the 9th of January, so it's a good time to sort of give yourself about a 3-month window to start looking, and depending on your budget, there's obviously different waiting periods and that, but there'll be good buying next year. I think if you are going to look to buy in the next 5 years or so, there's a lot of reasons to think that the next 6 months will be the best time.
Cool. Thanks for joining us, everyone. This is Inside Commercial Property. We'll see you again next time. Until then, bye-bye.